All right, guys, welcome back to another masterclass with 7 Ways to Wealth. I'm super excited to introduce our guest speaker for tonight. Her name is Lady G. She is a serial entrepreneur from New York, you guys, okay, the Big Apple. And so she is a professional. She's a financial professional, and she helps people set up their retirement. She helps people, get that generational wealth. She helps people with insurance and all these lovely things, okay? Protecting your assets, all kind of stuff. So she is definitely the lady to know. And I'm super excited that she decided to do this masterclass for us tonight. Lady G, how are you? You have the floor.
I am well, and I am excited to be here tonight. I am loving the energy, you guys. I'm telling you, it is very unusual, I can use that word, to go on a Zoom and have so much powerful energy. So I'm loving it. So whatever you're doing it right, Queen. So listen, I'm happy to see everyone. If you can give me sharing capabilities, that'll be great. Happy to see everyone. I am Lady G, and my passion is educating you guys on what everyone else won't. And I get myself in a lot of trouble for doing that. But listen, I'm willing to put myself out there if y'all are willing to take the catch. So let's get started. And you tell me when I'm going too long, because I know I can go off in a rant. So time me, okay? Let's see here. All right. Okay, guys. So I don't know who's in the room. I don't know if we have entrepreneurs, if just have individuals, but there is something for everyone. And the gentleman that was just speaking, there is something that I have for you towards the end that you have to see. You may have seen it already, may be redundant, but I will not feel good leaving this without showing it to you. So listen, we have been miseducated. Whether you agree or not, we have been miseducated when it comes to how we handle our funds. I often share a story that when I was growing up, I would get $1 and I would want to run to the store and spend it. And my grandfather would always say, money burned a hole in my pocket. But within minutes, I was at the store. He didn't tell me to put 50 cents in the piggy bank. He didn't tell me to go to the store and just spend 50. He let me spend the whole $1. So where did breaking that generational curse occur? It didn't. And I grew up not being able to handle money. And it's not until my later years, I'm like, there's got to be a change. I want my children to do better. I want their children to do better. And if we don't speak about things now, how will we change what's to come for when we're gone or as our children raise their children? So I do not just handle life insurance, but it is my biggest thing. I don't know who told the lie, but GoFundMe is not the funeral expense account. So I just need us to be clear on that, whether you agree with me or not. It is not. It's embarrassing. And we need to put our stuff in order. But I assist with many things, whether it's estate planning, whether it's debt and tax relief, whether it is getting a college education fund for your child. We do it all, whether you're a business owner and you need to get your succession plan together. A lot of people know, and if you can put in the chat real quick, guys, work with me, some engagement. Put a 1 in the chat if you've ever heard of Key Person or Key Man Insurance. Real quick, y'all. Or put a 2 if you've never heard of it, so I know where we're going here. Okay, so we have some people that have heard of it, and we have some people that have not heard of it. And I like to see that a majority have heard of it. So for those, okay, now talk about it, Maurice. All right, congratulations. You in there. And I hope you are in somewhere good. If you not, contact me at meetladyg.com. But listen, I'm in the, hold on, I missed that comment. Hold on, let me go back. I seen something about funeral services. Someone's in funeral. I'm in the funeral. I am, oh, no, financial services. And okay, are you an advisor? Now, Tiffany, tell me if you're an advisor so I know to watch my words. All right, guys. So, great. Okay. So awesome, guys. So listen, so we have a mixture, right? So I did see some twos. So there are people that have never heard of key person. Some people call it key man. Before we go any further, if we have business owners in here, you really need to consider key person or key man insurance. First of all, number one, if you're the owner, you should have one on yourself. If you have key employees, I tell everyone, I do not have a creative bone in my body. My closet is 90% black, so I cannot do it. So if I have a business and I'm depending on someone who's good at marketing and they bring in $5 million a year just by their marketing skills, you best believe you better put a key person policy on them, because the key person policy, it would be the insured would be the person, the business would be the owner, and the business would be the beneficiary. So whenever a life event happens, that policy will pay out into the business. That's cash flow, guys. So let's just deal with a $5 million number. If it's 5 million, and whether that person loses their part of the business in a divorce, whether they decide to pull out the business, whether they get ill, whether they have a disability, whether they pass away, that policy is immediately fed into. Now, your business has $5 million in its cash flow, and you have the opportunity to not feel rushed to find someone to replace that person. It's a big thing. Now, if you get it as the owner, I had statistics, and I didn't bring it for today, but it was 80 to 90% of businesses are family owned, right? Now, the numbers decrease dramatically. Those businesses do not last past it's like 12, 14% past the third generation. That's crazy. And that's because they did not have a succession plan in place. If you leave a business to your children, something happens to you, they wasn't educated on how to run the business. They don't have the funds to come up to keep the business going. That plan would keep that going. Brianna, I don't know what you're saying, but thank you for helping me out, because it's coming through the screen real fast. So I think you've flown with me. So listen, guys, so that's on the business side. So I have to say that because I have been a serial entrepreneur now for 15 years. I've been off Wall Street now since I left Wall Street in 2008. So I have not looked back. I have been an entrepreneur ever since. I believe in multiple streams of income. I'm at 7. Someone gave me a challenge yesterday, and now they're at 9. So I said, I got to get up to them. So I got to find me 2 more. So I'm big on entrepreneurship. I'm big on us protecting ourselves, because when I left Wall Street, I left behind the 401k. I left behind the stock options. I left behind everything that seemed to make me comfortable. But as an entrepreneur, did you ever think, what are you going to pull on when you go to retire? What if you want to retire early? Do you have funds to be able to do that? Do you have a backup plan if the government decides to do another shutdown and there is no Social Security check? You don't even know if Social Security I'm sure there's a lot of young people on here. We don't know if Social Security check is going to be around when we get to that point. So we have to prepare in advance. So listen, individual wise, we don't want no family left behind. if you looked at the screen that I had on previously, it literally said that 95% of America ends up poor. How can that be? That only 5% is considered wealthy America. You know why it's 95%? Because they win the lotto, they don't know how to hold on to it. It's gone just like that. Millions gone just like that. People wealthy, gone just like that. 401k, stock options, gone just like that. So it's that 5% that know how to hold on to their cash. They know how to let it last from generation to generation. They have that trust in place of protection. So it's not eaten, their funds are not eaten up in probate. I still, to this day, need Aretha Franklin to come back from the grave and tell me what she was thinking. To have 80 million in an estate and it's being eaten up in probate because she didn't have it protected? Are you crazy? Prince, same thing. All these people that you think would have money would have sense. Wisdom and sense does not come behind everybody have money. So if their money can be eaten up, then what about us that don't have as much? We need to protect, as the scripture says, a man leaves an inheritance to his children's children. And it's not just the man, it's the woman, it's anyone. If you are not doing right by the family that you even have in your own household, we are doing an injustice to the scripture itself. When we look at this, wealthy America, 5% are making more than $250,000. They have a diversified portfolio. They own a home and they are on their way or they're already debt free. The other side, we're sitting there twiddling with term life, and I'll get into that. We are renting a home. We have a 401k. A lot of people are in the reds with the 401k because of the Ukraine war and COVID. They have no advisor. They're working a 9 to 5. The struggle is real. We want to get to the other side, okay? Some people may have to start small. Some may be able to start a little longer. But the point is start. The point is when you get this education, do something with it. Because as I say all the time, if you wait and life comes knocking at your door unexpectedly and then knocks you off your feet, you're going to wish you had done it when you was told to do it, okay? One thing about the wealthy, because we all seem to want to be like the wealthy, well, you got to do what the wealthy do. And the one thing that they do is they don't forget one rule: make money, never lose money. And they have a second rule: never forget rule number 1, okay? So you want to make sure that whatever accounts you have, know what it's doing. Know which one you're paying management fees for, which one is covering the rise of inflation. I haven't even looked, guys. I'll be honest, for the update. Last I heard, we were like at 7.8%. We were down from like 8.6. But I still go into the grocery store. Chicken wings are still $20-something a pack. So it ain't go down that much, all right? So what accounts are you avoiding double taxation? What accounts do you have that you have complete flexibility and liquidity to your money? What accounts do you have that is giving you compound interest? What accounts is going to affect your Social Security? Number 9, I have to slow down on this one because so many people do not realize it. Critical and chronic illnesses is the number 1 cause of people losing their homes today. Whether they're filing for bankruptcy, whether they had to continue to refi, and then all of a sudden they were above their head with the mortgage because the hospital bills was too much, treatment bills was too much. It is crazy. Mike, I lost where the 22% is, but I'm sure y'all are flowing with me. I'll get to I can't look at the chat. Critical and chronic is the number one cause of people losing their stuff because guess what? They didn't prepare. They did not have a plan B. I'm talking about, just think for a minute, someone in your family that you know had a critical and chronic illness and they depleted the checking account. They depleted the savings. They cashed out the 401k. Shucks, they wasn't even 59 and a half. So they lost even more money in the 401k because they paid that early penalty withdrawal. So you want to make sure that you are aware of that. Now, you also want to realize, a lot of people don't realize this, you can go confirm it with anybody you know that's a nurse, or find one and confirm it. Whenever someone leaves here, a nurse picks up the phone, and when she picks up that phone, before it's hung up, she has given your name and your social security number. Every one of your accounts have been frozen. Your family can't get nothing in and they can't get nothing out. It is going to go through the probate process. There's only 3 things that avoid probate. That's life insurance, those index annuities, and a trust. That is it. I will say it again for the people in the back. Life insurance, annuities, and a trust. That means if it is not one of those things, it will go through probate. I'm also here to tell you, you can debate me if you want. People seem to think, oh, I have a beneficiary on my account, so it's fine. No, it will still go through probate. The only thing the beneficiary is doing is, after it comes out of probate, if there's anything left, then they know who to give it to. Probate is expensive. Probate is not free. It comes out of your money, the money that you said you was leaving behind to your family. You are playing Russian roulette if you don't have your stuff protected. I see a question and I'm gonna come back to it. So there are different financial portfolios out there, right? You have checking, savings, 401ks. Look at this list. See which ones you have. You may be on your way to having them all. You may just have one. You may have 5 of them. Just know that this is what financial portfolios consist of, and just know where you stand within it. I just want to quickly show you, if you took that list, look at this and say, okay, well, I had a checking account. Okay, well, I have an IRA. Look at this chart and know what account you are losing money in or never losing money in. And that is the checking, the savings, the CDs, index annuities, life insurance, and municipal bonds. Any other one of those, you are losing money. How can you be losing money? Because first of all, look at a 401k. It is tied to the stock market. Stocks tied to the stock market. So that means if the stock is down, stock market is down. I think I heard that from someone earlier, that if the stock market is down, that means I'm going to be losing money in that account. So you don't have uninterrupted growth in those types of accounts. What accounts are you paying someone to manage your money? Listen, I'm a financial professional. I'm not a financial advisor. Nothing against financial advisors. Just be clear that you are paying a financial advisor to manage your money, and they get paid whether you make money or not. Just know what accounts that is happening in. Just let it be clear ground, okay? If it's a checking, savings, CD, index annuities, bonds, life insurance, you're not paying someone to invest your hardworking money, okay? What accounts will give you the coverage if inflation is where it is now or beyond? Because we sure know we haven't seen 3% in a whole long time. And these other accounts, you put money in these local banks, Chase, Citibank, Wells Fargo, I don't care which one you bring up, I promise you, you're making less than 1% interest there, okay? That less than 1% interest is collecting dust on your money. The wealthy do not get happy that they have money in Chase and Citibank. What they do is they get happy when they find somewhere they can put money to grow it, double, triple. They put enough in the local banks to pay bills. That's it, not to get wealthy. What accounts do you have that you don't have to worry about paying the taxes on? Okay. Unless it's the Roth IRA, life insurance, municipal bonds, and even the five. A lot of people are not clear on this. I can put people in 529s. I have no problem, but I just have something can suggest that's a little bit better, because with a 529, 529s had its place. Everything had its place, just like we used to have beepers, okay? We evolve. We come up with new things. So with the 529, it's an educational fund if nobody knows. But if my little boo-boo grows up 18 and then tells me they don't want to go to college, and I say, wait a minute, I've been saving my hard-earned money to send you to college and you don't want to go? Well, I'm going to go fly around the world then and enjoy my life. Guess what? The minute I do that, I will now be paying taxes on that money because it is being used for something other than the intended purpose, and that was to send that child to school. If I use it for anything else, I will be penalized. I will also be penalized in some cases if they decide to go out of state or the country for an education. So 529s have a little bit more stipulations that I'm comfortable with. And now that there's something better out there with no stipulations, I like it better. And we'll talk about that in a minute. Okay, what accounts do you have access to the cash? I mean, you can go get it when you want, how you want, and no questions asked. Well, if you look at this, unless it's a checking or savings, stocks, or life insurance, you don't have that flexibility in the other accounts. The reason there is a question mark near the IRA and annuities, because if you are younger than 59 and a half, no, you do not have complete access to that money. So you don't have full, complete control of your money. And I think if we're going to work hard for our money, we should have some control over it. Listen, Albert Einstein, if he wasn't a genius, he was a genius when he made this quote. He says, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Who's paying it? Student loans, mortgages, credit cards. The companies are getting rich on us because they charge us compound interest. So when you make that minimum payment on a credit card and get the bill the next time, does it even look like you made a payment? No, because you are paying on the interest. You haven't even touched the principal. So with that said, what are you doing? What are you doing? So you want to look at other avenues. Now, real quick, flow with me. Put a 1 in the chat if you know the difference between simple interest and compound interest. Put a 2 if you don't, real quick. All right, we flowing. So, all right, so I ain't got to go deep into it because it looks like we got a lot of finance people up in here. Okay, we got to know. Okay, got it. Simple interest. Simple interest is what maybe the local bank will give you. Chase, Citibank, Wells Fargo, where you're making that less than 1% interest. You put $100 in, you will make, say you made $1. I'm not exaggerating, guys. So say you made $1. So now there's $101 there. The next time you go to make interest, it will only be on the $100, not the 101. Compound interest, if you put 100, you made 20. Now there's 120. Time you go to make interest, it will be on the 120. Then you made an extra 50. Now you're at 150. Now you're going to get interest on the 150. That is how you want your money to grow. Okay? And that's what he means by it being the eighth wonder of the world. Quick example. If you look at this chart, right, you have 2 accounts, simple interest, compound interest. You put 100,000 in each account, right? Let's just say each account was doing 10%. If you look at how the rise starts to go up a little bit in compound interest, right? Year 4, we're going. Year 5, we're getting there. Year 10, 200, okay, 259. Year 20, that 100,000 is now worth 300,000 in Chase. In the compound interest, it's now worth 672,000. Year 30, in Chase, it's now worth 400,000. In a compound interest, it's 1.7 million. Year 40, it's 500,000 in Chase. Someone quickly off mic, tell me a guess on how much it is in year 40 in the compound interest. All these finance people that knew all of it, come on, come tell me. Anybody? Nobody want to take a guess?
10
What is
million.
it? 10 million?
What's the question again? I'm sorry.
So in year 40, how much is in the compound interest account?
And it's doubling every 10 years?
I don't know, is it?
Is that 3.4? Is that
4.5? 4.5.
Okay.
That is why it is the eighth wonder of the world. That's what compound interest does. So yeah, it's amazing. What accounts can give you that type of compound interest? You can't get it in no account unless it's fixed index annuities or life insurance. Those are the only two that you will get that uninterrupted, guaranteed more than 3%. What accounts have your Social Security income at retirement in danger? Okay. Unless it's a Roth IRA or life insurance, all these accounts that you have can affect your Social Security at retirement. And again, we're all young, but you need to be thinking about that retirement. What am I talking about? Look at this real quick. And we'll deal with the center column. So other taxpayers, who is that? Single people or married, and you just don't want to file with your husband or you don't want to file with your wife. If you are making $25,000 or less, you don't have to worry. Your Social Security income is tax-free. No worries. If you could live on $25,000, even more power to you. If you make more than $25,000 to $34,000, up to 50% of your Social Security income is taxable. If you thought you was getting an $1,800 check, you will now be getting a $900. What does that mean? If you go taking money out of an account like 401ks, if you take money out of a 401k at retirement, that is considered or income. So it is going to be counted towards. So that can put you over the income level. If you're making more than $34,000, up to 85% of your income is taxable. Social Security income is taxable. A lot of people are finding this out at retirement and getting hit over the head. I just had a woman reach out to me and said, Lady G, I got to go find a job. She just literally retired, literally last week. And I said, what do you mean you're trying to find a job? She says, I see what I'm getting in pension and Social Security. She said, I can't afford not to. So I said, but if you go get a job, that means your Social Security, what you think you're getting in Social Security, you're not going to be getting. She says, I know, but I can't afford to do otherwise. Are you kidding me? So I need everyone to know that comes in contact with Lady G that my tombstone will say I died of natural causes, not because I worked all the way to the grave. I need us to be clear on that, okay? Okay, so let's move on. I'm doing good on time. Am I doing good on time? Okay. What accounts do you have that, yeah, Colin, I'm shaking my head too. So critical and chronic illness, right? What accounts will cover you? I already said if God forbid life comes knocking at your door and you had to deplete the checking, you had to deplete the savings, the 401k, you had to cash everything and then still didn't have enough.
Life insurance?
That's right. Life insurance.
With living benefits.
With it, yes, Lord. So we get in there. So with even the index annuities, it's a half-half because if you ain't got that age, you can't really get nothing the way you want to get it, right? Now, my girl already sat there and said, living benefits. There's a big difference between living benefits and disability insurance. I can give you both, but there's a difference. Disability, you mess up your knee, okay, you might be wobbling for a little bit, but I'm talking about the knocker outer where your family depends on your income and you are down for the count. You laid up in a hospital and you can't go to your 9 to 5. So they're counting on your income. You ain't bringing in no income because you trying to get your life to keep going. That is when living benefits come into effect. Did you know that there is terminal illness riders? If you put that on your policy, you can get up to 100% of the death benefit. If it's $1 million policy, that's access to $1 million. If God forbid a doctor diagnoses you with less than 12 months to live, okay, you can get access to that. Now, another one is critical and chronic. So let's deal with critical. Critical illness. We all know somebody. It's not far-fetched for us to know if someone had a heart attack, stroke, cancer, dialysis, ALS, major organ transplant, HIV, AIDS. You can get access to your death benefit, depending on the company, because all companies do it different. Some companies will only give you up to 50% of the death benefit. Some will give you up to 90% of the death benefit. I work with over 100 companies. So I'm telling you, everyone does their business differently. Chronic illness. My father was a commercial. When he had his stroke, he could not do all 6 of the daily living activities. When you can just not do 2 of those 6, you can't feed yourself, you can't clothe yourself, you can't bathe yourself, shower, put yourself to the bathroom or to the bed, you can get access to the death benefit. Some companies up to 50%. That is income protection, guys. That is, if it's $1 million policy for terminal illness, having access to $1 million. If it's the critical and chronic, depending on the company, up to 900 or 500,000. That is income protection. That is saying, listen, I got this diagnosis. I need to go home and heal, do my treatments or whatever has to be done. And I don't want to have to worry about how the lights are going to stay on, how the mortgage is going to get paid. So I make one phone call and they send me a check every month until I'm able to get on my feet. Or they could do a lump sum check. Whatever way, they go by how strong the illness is, okay, to determine that factor. What accounts do you have that is going through probate? I don't have to go through this no more because I already told you the 3. If you ain't got life insurance, annuity, or a life insurance, annuities, or a trust, then it's not avoiding probate. Okay. My Instagram is LadyG_financial professional. Now we have clearly seen that everything that I've spoken of, there's only one common denominator that will cover all of them. Are we not under that? Can we agree on that? Can I get a 1 if we agree? Can we really agree? Brianna, you getting ahead of me, man. You're not everybody's in the industry.
I'm so sorry.
Very
I'm so
good.
sorry. I thought you said it already. My bad.
We ain't get there yet, but nah, it's all good.
I'm so sorry.
She's excited. So the one thing across the board that covers everything is life insurance, okay? So if I was to ask you guys, how do you want your money to grow? Okay, there's only 3 ways. It's either going to be fixed, variable, or index. Can one person on mic and tell me how they would want their money to grow? Anybody looking at these graphs, which one would you pick?
I would be
I'd rather not hear of anybody in the industry.
Index.
Thank you. All right, but why did you choose index?
Because you can leverage that. Because you can leverage that against the policy.
Orlando, you in the industry?
No, I eliminate mortgages and I kill the mortgages. So I know you was talking about the mortgages. I just want to bust you out, but I'm taking like 4 banks to court right now. We're about to clear out 2 tomorrow.
All right. Well, listen, he's right. Okay. So listen, anything fixed is like whole life, your checking account. It's growing at a fixed rate. So say like whole life, you probably are making like 3% on it, right? Variable, anything variable means it is tied to the stock market. That's the stock options, the 401ks, all of that is tied to the stock market. So when the market is up, your policy value will be up. That's like variable insurance, variable life, universal. Variable universal is tied to the stock market. So when the market makes money, you'll make value in your policy. When the market loses money, you lose value in your policy. If you don't like that type of volatility, I don't think that'd be the policy for you, unless some people like that type of volatility. And I feel I have no problems with volatility. I have no problems with diversification as long as you have your foundation set. Okay.
Can I add one thing?
Go ahead.
All right. So I would, when you have volatility, I would go to APX, grab some gold coins, and balance that out with gold to stabilize the volatility on top of that, and then throw that in the trust with the LLC.
My. Have you been in my clubhouse room?
I mean, no, I used to be all over Clubhouse, so I don't know.
That's exactly what we be dropping.
I probably was, but now I'm rocking on Instagram, so you know.
All right. So he's absolutely right.
I wanted to plug in with you on.
Say that again.
I wanted to plug in with you on some stuff. So, I mean, I ain't mean to mess up your
all right. Well, we could plug in. Let's get through this. So index, right? So we already know variable means that you make money, you lose money. If you don't like that type of volatility, that might not be the product for you. Anything index, IULs, and index annuities means that it has protection. What's the protection? And I think the best way that you can understand this is if you think about insurance, the first form of insurance ever made was term insurance. That's why people seem to think the only thing that exists is term and whole life, because they don't understand that things have evolved. So you have term, that it's temporary. Well, you know what? I'm getting ahead of myself. Never mind. Index, right? Is protected by a floor. You cannot lose money. You cannot lose money to the market. It's protected by a floor, whether it's 0%, 0.75%, it's protected, okay? Now, there are different types of life insurance policies out there, as I was just about to start saying, and people seem to think only term and whole exists. There's group life insurance, right? Group life insurance is what your job gives you. If one more person tells me, well, I have insurance on my job, so I'm good. Boo-boo, you're not good, because that policy does not stay when you go. It don't leave with you. It's not a pocketbook. It's not going with you. It stays right there with them. I don't care if you quit, you get fired, or you retire. And in some cases, if you don't even die while on the job, on the clock, it will not pay out. I have a real life commercial. A young man was leaving his job and got in his car, did not make it home. When his wife went to make the arrangements, she called the job to get the insurance information. They said he was not covered. She said, what are you talking about? He's been employed with you for such and such amount of years. They said, yes, he has been, but he had clocked off for the day. That policy did not cover him. Keep playing with these group insurance policies. It's free for a reason. Mama said, you get what you pay for. You have no coverage when you leave that job. Some companies will allow you to take it with you. Some don't. Yeah, see, I gotta stop looking at that chat. So some people, wait a minute. Some people will let you take it with you. But when you see how much you're going to be paying, one woman called me up for insurance. I couldn't give her anything because she was going through chemo, breast cancer. I can't get you a thing while you're going through chemo. She cannot be without insurance through chemo. So she called her job. She literally called me on May 26th. She was retired on May 31st. She asked her job, listen, I'm in a bind. Can you do me a favor? Can I take the policy that you've been giving me? They said, sure you can. Just pay us $1,500 a month. So y'all keep playing with these group insurance policies. If they allow you to take it and you see what you're going to be paying, you're going to wish you had got it beforehand. It is only payable upon death, which means it's only beneficial to your beneficiary. There is a lot of people that leave here after 65. That means you have retired, you've left the job. What insurance do you have? That means that there is that 0.9% probability that policy will actually pay out, because that's the only percentage that group insurance policies pay out. It is not considered life insurance. It's very deceptive. People think they have insurance and they do not. Go ahead, Brianna.
So
I was gonna say that the only real reason why they let their employees take that policy with them, and it'll only be whole life, and they're gonna be paying the same premium if they for that policy as if they were to get it from the actual company in and of itself.
but this
So
is
you're not. A lot of people think that they're getting a for the policy that they can keep. They're not getting it at a group rate. You're getting that term policy at a group rate. You can add what is it called? Supplemental coverage at a group rate. But anything that you can take, you're getting it at the exact premium that they're going to cost. They're going to charge you as if you were to go directly to that company in and of itself.
But this is what they don't. But this is what they don't tell you. When they
That part. That's why you got me.
When they take
I
out
throw myself under the bus.
when they take out the policy, when they take out the policy on you as an employee, you can go back to them and say, I need to see the whole policy. Then you could say, because you know you are a shareholder. Every employee is actually a shareholder.
Yeah, but you don't have no leg. Let me tell you something. You have no leg room when it comes to that company because they only have that policy on you because it's a write-off. It's a tax write-off.
Yes,
but by that being a unilateral contract and them not giving you full disclosure of that, because I've already did that for 2 companies already. So basically, once they did
talking, I got to get my charger. Go ahead.
Once they didn't disclose that, now that's a violation on the term of the contract that they enter into, but nobody raises that, and most attorneys want to raise that either. So when you bring that up and they have to disclose that information and they didn't at the time of first signing that contract, that's a violation upon contract law. So,
right, but even if it's a violation, even if it's a violation, right, then that means that contract is null and void. So the only thing that you could get, possibly is maybe premiums paid toward that policy. Typically businesses or companies that are paying policies, or that 1 or 1.5 or 2 times their annual salary, they're paying it at their expense
but now they got to cover damages because on top.
But you going into the law now, and how many people can go against a company with the law? They're
not even gonna tap into that. That's for people who understand the universal commercial code. That's the only people who understand UCC.
Yeah, but I'm just saying that's why we all giving the information from there, so that way when you get with the employer, you say, listen, I need to structure my contract with you on the aspect of number 1, I want to have share stock in the company as well as me working for the company, but I want to know the whole policy that you took out on me the day I was hired.
Orlando?
Yeah. Oh, my bad.
No, I'm going to say this real quick, and then I want to be invited back, so I want to continue up real quick before we are going to have a Q&A session. She gave me a time limit. I think I done went over.
I know, my bad.
But Orlando, you sound like someone that is very knowledgeable of the law, and not everybody is. So we have to deal on the level where people are at.
You're right.
Okay, so let's really try to wrap this up. So term life, right, is temporary. It's cheap. People be sitting on the couch, see the commercial, $599, $500,000 insurance, and say, oh, let me dial the 1-800 number, and they grab it. Boo-boo, it's temporary. It's term insurance. Term insurance, you could purchase it for 10, 15, 20, 30 years. When that 10, 15, 20, 30 years is up, you no longer have insurance. You're out there like a ship without a sail. It is only payable upon death. You cannot go pull $1 out. There's no cash accumulation. You can't pull $1 out if you need a heating bill paid. If you lapse and you miss one payment, that's it for the policy. And come on, let's be for real. Has anybody ever missed a bill? I mean, you could sit there and go on vacation and forget that, oh my God, my term needed to be paid. Or you could be in the hospital. Oh my God, am I thinking about paying my term? But because of a life event that kept you from paying that term, now it lapses and now you have nothing. You are gambling against your life. It's renting a home instead of buying it. Only 2% of term policies pay out. That means 98% don't. Why? Because they either outlived the term, they lapsed on the term, something happened, but the bottom line is only 2% actually pay out. Most companies will not even give you one after the age of 65, okay? The premiums, if you're paying, I don't care if you're paying $70, when that term ends, go ahead and continue on. You'll be paying 10 times the amount. So if you was paying 70, you'll be paying 700 a month, okay? The next one is whole life. Whole life is permanent. It is permanent, but there is different whole life. You have traditional whole life. There is no guarantee of cash accumulation. There is no benefit to you while you're living. It is more expensive than term, but at least it's permanent. If you have $100,000 whole life policy and you got $500 in cash and say you take it out, when you leave here, if you did not pay the $500 back, it will be deducted from your death benefit, which means your beneficiary will get $9,500. People don't seem to know that. They do not get, if you didn't touch the 500, they still don't get it. They will only get that 100,000. Okay, are we clear on that? The next one, and you have some in between, but I ain't no sense of me going over it. Just remember, fixed universal is fixed. Variable universals tied to the stock market. Index universal life is not, and it is protected, as I told you before, by the floor. It is so good. It grows at a spread, compound interest. So that gentleman that was talking about money earlier in the call, that's what you need to look into. It's protected by any losses from the market. It has you can go, depending on what company you go with, you can have a cap of 13, 14%, or you can go uncapped. So if the market makes 30, 40%, you can make 30, 40%. The point is you can't take any negative losses. If you go back to 2008, when the market went boom and people lost 38, 40 something percent of their money, the only people that did not lose money was those that had it tied in index accounts, okay? And everybody, IUL is not for everybody. And everybody won't qualify for an IUL because you have to pass a health exam. So if you have cancer, you won't qualify. If you get diagnosed with something bad diabetes, you won't qualify. Kids, autism won't qualify. So IULs is amazing. Could be used for college funds, pay for your baby's first car, pay for their first house. Protect it. Won't be in probate. Anyone filed for bankruptcy can't touch it. Any creditors come after you can't touch it. No lawsuits, can't touch. Untouchable, okay? I deal with high-rated companies. Some of these you may have heard of. It ain't even a fingerprint. Pacific Life, Prudential, Transamerica, Nationwide is on your side. You know what? So those are the good companies. I need 5 more minutes and I'm done, okay? I want to show you what an IUL looks like. And a lot of people, the way those ones was going earlier, must have seen an IUL. So let's run one real quick. Let's say we have average person, let's say 32. Let's say they live, let's go Georgia. Let's say it's a female. Let's say they're in good health. Let's say, I don't know, maybe they want $1 million policy. Let's say they're paying it on a monthly basis. Let's say at retirement, they want to start receiving retirement checks from it at 65. Okay. And you could put those riders, that terminal, critical, and chronic. It doesn't bring up your monthly payment. You only pay on it when you actually go to use it. So here we have a 30-something-year-old. I think I put in 32. Now, with an IUL, you have, I need you to think about this, please. If you're putting money in Chase Citibank, You could put whatever you want in there, right? Well, this gives you the same type of opportunity. The thing is, you're going to grow at a compound interest rate on whatever you put in. So if the minimum someone needs to pay themselves on $1 million policy for this 30-something-year-old is $651 a month, but they can drop up to $54,000 in it. Tax-free growth. Tax-free growth. And that tax-free growth means that as long as you don't go over that amount that I tell you, that $54,208, you are good. The minute you put $1 over, you have just turned it into a MEC account, which is modified endowment contract, which means you have just invited the IRS to pay him taxes on every dollar after. You didn't have to pay no dollars on it before because this is a tax-free growth account. We all have to pay the IRS enough to stay out of jail, but we do not have to give them a tip. We are overpaying in taxes because we do not know that there are ways to not overpay in taxes, and this is one of them. If someone 30-something years old is just putting the bare minimum, they're not even overfeeding it. Like any overfeeding is anything above that 651 for that person, right? So they're just putting the bare minimum. At age 40, they will have put in about 60, or age 40, 62,000, right? But the cash, they have about 30,000, okay? Keep going, let's go down to 65. They retire. They don't have to put another dollar in it after 65. They put in 257,000 over 33 years. How much cash do they have? Someone quickly on mic, tell me how much cash they have in it.
580. Oh,
Okay.
806.
So they only put 257,000 in. How do they have 580,000 in cash?
Accrued interest. Interest occurred.
Compound interest. Compound interest. Eighth wonder of the world. If you pick another one, age 80, how much did they put in over those years that they were actually putting in? I think it was 30-something years. But how much did they actually put in total?
257, 733. And
how
they
much
have
cash do they have?
1.285.
So they only put 257,000 in, but they have 1.2 million in cash. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. I'm going to shorten it because I went and got winded. There's so much more I can go into, but I'm going to stop right there. And I'm going to try to look at this chat and tell me what questions I missed. But I appreciate y'all listening to me. And I tried to do it in the time allowed it, but thank you for having me.
Miss Lady, you was absolutely phenomenal. Like, thank you so much for this masterclass. We are definitely going to open up the floor for questions. I know people have questions. So whoever has a question, they could go ahead and unmic, and Lady G is here and available to answer your question.
Hello.
Go ahead, man. Go.
Yeah, I was gonna ask, is it possible to front load that IUL? And if so, how much would it be to front load it to be able to pull off of it or use it as soon as possible?
So you can front load it up to the max for that year. And then a portion of it will be available that year. So we got to work the numbers for your particular age and your particular health, because that's what it all comes down to, the numbers, your health, your age, and what face amount you want. I mean, I ran an example of $1 million policy, and somebody might want just a 250,000. I just did a 4 million one last week. So everyone's different. So it depends on your face amount, your age, and your health. But whatever you decide, the face amount, it will give me the max so that you don't hit MEC. So you ain't got to pay those taxes to the IRS. Because if nobody gets what I'm saying about that whole tax thing, if you put money in Citibank and Wells Fargo in your savings account where you're making that less than 1% interest, I just got to keep pulling that out there. you get a 1099 after you hit a certain level, don't you? And you mean to tell me you have to pay the IRS taxes on money that you were saving just to make a little bit more money on the interest that they were giving you? Mm-mm. You will not be getting a 1099 at the end of each year in this type of account. It's tax-free growth, tax-free withdrawals, tax-free loans. It is a tax-deferred account. So whatever that max is, you can put it whatever that number is for you particularly. And you can get on my calendar. Y'all can go to Meet Lady G. I'll put it real quick in the chat. If you go to meetladyg.com, there is a button there that says book with your financial professional. You can get on my calendar. It's free, don't cost you nothing but your time. And we can discuss your numbers. But yeah, there is a max number. Your portion will be available the first year and continue on. And y'all, an IUL is powerful. You jumpstart that thing for the first 7 to 10 years. You ain't never got to put another dollar in it. And it will run on gas on its own by the interest alone. Unlike whole life, you got to pay you're either your entire life or up in 10, 20, or 30 years. Next question. Did I answer your question? Well, who is that?
Yeah,
Montez?
yeah,
That helps.
Yeah, that helped. That helped as far as, like you said, after a year, and then it'll be the max depending on your information. So yeah, I got an understanding of it, but I just get the numbers later.
Okay, very good.
So
okay, next question as I'm looking through the chat.
So let's say if I got money tied up from my business, and I got a property that I wanna leverage off. So I pull money out of that. But I'm not sure if I'm gonna be able to do the URL because I know disabled or whatever. So I don't know if I'm gonna be able to to get coverage on it. I don't really have an illness, but I have they said I was borderline, whatever, but I'm
Just try it anyway, brother. It's called, you can still try it. Just reach out to her. Like, just try it.
all right. So what I'm gonna do is, what's the max what's the max you could pull out? Because I'm gonna try to pull something out of my property.
It depends on what face amount you want. And then I'll tell you what the max number is for you. It depends on how much you want. They don't have a limit on what you can pull as long as you can justify it.
Okay.
So like, for instance, like with most companies that I deal with, I can get you coverage up to like 2 million without them asking for financials.
All right. Oh, without, okay. All right. So
yeah.
All right. Well, it ain't gonna be about 2 mil, but it's okay. All right, gotcha. But yeah, I still wanted to plug in with you on some other stuff too.
Absolutely. Book time on my calendar at meetladyg.com. You can even call me in the office, 732-820-9710. Not tonight, but tomorrow you can reach me in the office.
Yeah, put that in the chat. Put that in the chat.
Okay, I will. I just don't want to lose my spot. I'll do it in just a second. Maurice, again, congratulations on passing your life and health exam the day before Thanksgiving. I'm assuming you're with somebody, you're with a broker. If you're not, we are added to the team daily. So feel free to reach out if you want to, see your options. Any other questions while I'm looking?
Yeah, I have a two-part question.
Okay. And Tiffany, congratulations, financial services. Go ahead.
Once you set up one of these policies, does that premium, does it count towards debt to income ratio? And for somebody like me who's a W-2 employee and a business owner?
Shoot, if you a W-2 employee and business owner, get you a key man person on the business side and an IUL on the individual side. Double coverage.
Now, can both of them be me for a double whammy?
Yes, Lord.
Okay.
The business would be paying for one, you personally be paying for the other.
All right, and as far as debt to income ratio, the premium wouldn't affect that, correct? Or
Are you asking me, does the premium you pay on an IUL affect your death benefit?
oh no, like your debt to income ratio. So now let's just say that this is
Oh, no, your debt to income ratio has nothing to do with it. No.
okay.
Now, if we were doing an annuity, your debt ratio has to do with it, but not with the IUL. No.
All right, perfect. Thank you.
You're welcome. I just want you to make sure you can afford it, so you ain't collapsing on it. That's why I say IUL ain't for everybody. If you can't
Well,
really stay with it, don't get it. Stick with whole life.
well, I have a strategy for being able to
Okay.
afford it through a line of credit, to where I can front load everything and fill that on the back end. So
Okay.
thank you.
You are absolutely welcome. Brianna, thank you for, I see your comments in the chat. We were synchronized. That is very good. It's nice to see so many agents are in the house. I hope y'all are happy. If you ain't happy, please know that you can come and talk to me. We add it to the team daily. Just want to put that plug in. I see Michelle's hand up. Go ahead, Michelle.
Hey, good evening.
Good
You
evening.
retirement. So I have a pension over in Maryland. Can that be rolled over into the IUD? Was it IUD?
No, it cannot. But it can be rolled into an annuity at no cost to you, and I think you should consider that.
Okay. So do you
You
need
can't roll, let me just clear it up for people in the room. You cannot roll a retirement account and a life insurance account is two separate vehicles. You have to, in order to transfer one to another, it has to be the same like account. So you can't roll from a retirement into the life insurance. The only way you can get the money from the retirement into the life insurance is if you cash out the retirement. And why would you want to do that? Because we're trying to avoid paying Uncle Sam all those taxes. So what you could do is roll it into an annuity. And depending on your age, it will be how we'll figure out how to set up that annuity. Because if you're young, then we could just set up a regular growth account annuity, which means it's just growing your money. And then when you get to a certain age gap, we roll it into an income-based annuity, which means you can start to draw money in time for retirement. So hopefully that made sense.
Could they roll it into a trust and then utilize it through the trust like that?
Yeah, they can put the life insurance policy in the trust. The trust would be the beneficiary. Even if they get a trust down the line, it's just a change form where you could change the beneficiary to the trust and utilize it in the trust. Yes.
The trust is just an entity, like a corporation, a person,
Right.
a business.
Oh, I know.
Okay.
I know. Trust me. I know.
So MR asked the question, can you all show us how to wrap life insurance into a trust for our kids? Real easy. Put it in the trust. And that way, if you put $1 million policy on a baby, or if you left $1 million to a baby, or 250,000, you are not guaranteed to know that that child's going to be mature enough to handle that amount of money. So you could put it in the trust, beneficiary trust, and put rules in place. Boo-boo can't get but this certain amount a month. Boo-boo can't get but this month if they go to college. Boo-boo can't get this. Oh, boo-boo met so man can't touch this money. You can put rules in place.
Well, what I would say is, do an LLC, put board members with the trust, so that way the board members could be allocated to give man that money based on what you allocate through the trust. So you got a bunch of board members that could be family members or whatever you deem that could be responsible to oversee that. But make sure that the people you put in place understand how to utilize that over the time.
Okay. Yes. Now, Brianna said, what if they want to start a business? I don't know what that part was about. So if Brianna's around.
Yes, I'm here, Mama. I was saying, you were talking about the benefit or the differences of the 529 plan versus the life insurance plan. And someone had mentioned like you mentioned, well, what if they don't want to go to college? I said, well, what if they want to start a business? That 529 plan is only limited to educational purposes, and
That's right.
you can only pass it down to a next of kin. So I was just adding on to what you were saying, because you were just on it all night. I do have a question until like once you go down, but I have a question.
Well, I would say before you do the 529, just do a trust and then do the insurance policy through the trust. So then whatever you want to do allocated through the business or whatever else, or college
So
or whatever. That's what
So I agree with you to a certain extent. The only thing is I do not tell anyone to wait to do a trust before they get an insurance policy, because you can sit there, wait to get a trust, something happened, life happens, you get an illness, pass away, and everyone is screwed. You get the life insurance policy first. And then when you get the trust up and running, you call me or whoever your agent is and say, listen, I got a trust now. I just need to change the beneficiary over to the trust.
I would say do it simultaneously. Oh,
Well, y'all go where the leading of the Lord take you.
yeah.
Go where the leading of the Lord. Okay, I see it. Did I get all the hands? I see Brianna, Michelle,
Yeah.
Montez. Did I get everybody?
Yeah,
I
I
have
wanted
a
to.
question.
Yeah, second part to my question.
Okay, who's that? Montez, go ahead.
Yeah. No, I just wanted to ask about the key man, as far as kind of, I guess, the numbers, how what that would look like. Like you said, you got a key player in your company or whatever, and you covering them. It would be according to what they make or their
Yeah,
age.
so we have a way of working out the numbers. So it's basically how much they make, how many years of coverage are we looking in case they were to leave, what would it cost to replace them if they left. So there's a lot of different scenarios. So I mean, we wouldn't really put a $5 million policy on someone that was only making 50,000, you know?
And it pay out when they leave or they die or they get hurt.
Whether they leave, they die, they lose it in the divorce, whatever the life event is, it kicks right in.
And the payments will be due to the all information.
It will be the business paying it.
Okay.
Then that's a tax write-off at the end of the year.
Okay. Yeah. So sound good. So okay. I'm gonna go here and I'm through. So what it make me think of is just like if you got a company and you end up on the payroll, you can have different insurances, but you can also have the fact that you working for your company, have a key man on you, let alone you have all these other insurances and everything else to protect you.
Then if you really want to get fly, you could just do a nonprofit 508 and then have the 508 do the LLC, run the check through the LLC, and then go through then it passes through the nonprofit. Then it goes to your personal account and you would draw it out of there, and it's not taxable at all.
With the key man on top of it, or the key man out?
So you would have the key man. So you have the key man for the business side,
right.
And then you can have a regular IUL whole life, whatever one you want to get on the individual side. Because remember, you can have as many policies on you as long as they're justified.
Right.
Yeah, because the Rockefellers carry like 300 policies.
Yeah, well, yeah. Anybody with a trust has millions of policies too.
Yes, so
I want to quickly go over. I seen something here in the chat, and I do want to make it clear. Term, like I think I made an analogy that we used to have beepers back in the day. Everything had its rightful place. Okay, I ain't walking around with a beeper because we've evolved. We don't have flip phones no more, even though I think they brought them back. Term insurance has its place. You just need to be using it the correct way, because you can use term. If you buy a 15-30 year mortgage, get a 15-30 year term, and that will, if God forbid life come knocking at the door and you part of that 2% that leave out of here, it will help your family pay off that home and not have to worry about moving into a 1-bedroom apartment like sardines, because they can't afford otherwise, because they were dependent on your income and you left them with nothing. Or you can't afford any type of permanent insurance. I don't need you out here naked. So get you a term. And when your financial situation changes, turn that term into a permanent. Now, there are different terms out here. Be careful. There's convertible term, there's pay upon premium term, there's increasing term, decreasing term. I like out of all of them the convertible terms because I can tell my client the minute your financial situation changes, we're going to convert this ASAP into a permanent policy. Because if you get diagnosed with something and that term ends, you out like a ship without a sail. So I just wanted to make that clear.
Or you could just call me and I'll just eliminate the mortgage.
Okay, I think I got all the questions. This was great. I don't know what the infinite banking question was, but
that's taking the whole life insurance policy and then leveraging that, borrowing the money.
No, not whole life. It's IUL.
No.
He asked about, that was my comment. He asked about the gentleman, I think it was, I can't remember who it was. He asked about if he can, how much would he need to upfront in the policy so he can take it out as soon as possible. And I was asking, was he referring to the infinite banking strategy?
Because I know they take 90 days most of the time. Some of them do 30.
What happened? What are we talking about? Term?
To be able to leverage the money that you put in, the time period.
Well, in an IUL, if there's cash in there year one, you can utilize it year one. There is no time limit, no age limit. If there's cash there, you can utilize it.
I thought some of them they want you to wait. Some days 30.
No, you're talking about paying the early penalty. So yes, in annuities, it's 7 to 10 years that you don't. After 7 to 10 years, you don't have to pay an early penalty withdrawal. In IUL, it's typically 15 years. So that's saying that if you open an IUL, put a bunch of cash in there, and then go to close it out prior to that 15 years, you are going to be paying them a portion as an early penalty withdrawal. That's what they're talking about. Okay. Not the fact that you can put cash. You could take cash year one if there's cash in there.
Oh shit. All right.
I want to appreciate and thank everyone that participated. And I was very happy to see many people in this chat. I don't remember who it was, but said that they want to join my team. Listen, y'all can reach out to me this evening so that we can talk. I was supposed to put that in the chat, wasn't I? Okay. Y'all do me a favor real quick, because I'm not going back through this chat. Put a 1 if you wanted to join the team. I think I've seen like 4 people, something like that. But I put my office number in the chat, which you won't get me now because it's after office hours. But if y'all want to,
I think Tiffany said that she wanted to join the team, but she left. She said good night. I don't think she's here anymore.
Okay. I think I've seen like 4 people. Is that Brianna's hand up, or did she just put that up again, or have that been up? Brianna, you joining my team?
You got a referral aspect?
Yes, I do. If you refer anybody, please reach out to me. Yes, I do have a referral bonus, and we can go into a referral agreement and talk about that. You can call me in the office.
I got a whole slew of people. I mean, I want to hook up with you because link my clients, and yeah, we can hook some things up. Yeah.
Okay, so can y'all do me a favor, because I'm holding the queen up. Can y'all send me, you may not want everyone in the chat to know your number. You know how in the chat you can send it just to me, a direct message? Send me phone numbers here so I can keep them on track. And I will text you when this is over. I don't know who it was that I seen. Let me see if I can quickly do it. But I thank you guys for y'all participation. Y'all was great.
Tonight was amazing. The information was also amazing. So I'm so glad that everyone was engaged. They asked good questions, and thank you for pouring into the community, Lady G. Like, you were phenomenal. Like, you brought it all. Okay, you came hard tonight. So thank you so much. And we definitely want to have you back on the schedule for sometime next year. So please pencil us in, because this information is valuable. Everyone, like me, I have an IUL policy, and I have one for every member in my family. So my little kids, like you was saying, you know, you just pay into it for a couple years. So I always tell people, like, you know, my kids are 3, 4, and 10. And so I'm overfunding their account. So by the time they're 18, they don't have to work. They do not have to work at all. Like,
That
they can
part.
just go, yeah, they can actually borrow money from their policy to pay their tuition, or, you know, to pay for room and board or whatever they need. So it's important for us to be able to set up our kids this way. And you can do that by utilizing these type of tools. So thank you so much, Lady G. Like, we really, really, really appreciate you, you know, coming on and educating us about this. So I put your Instagram in the chat. The website is also there. Your phone number is there. And this recording is going to be on YouTube tomorrow at 4 p.m. So you guys could catch the replay, and all of your contact information is going to be in the description. And the last thing I want to say is I'm going to be hosting a webinar this Sunday at 8 p.m. teaching you guys about trust and the importance of trust and how to protect your assets. So if you want to sign up for that webinar, just text the number that you got the Zoom link from, and we'll send you the Zoom link for that one. So any last comments, questions, concerns? You guys all need to be following Lady G on Instagram. I put her Instagram on the chat, and tap in with her, especially the people who said they could
Already
join her
followed.
team.
Already followed.
All right, that's what's up.
I'm just writing it down. I see the
Yeah.
direct message.
Got my number in the chat.
Wait, Orlando, did you put, everybody have your number now? No?
No, he did it as I direct.
No, I did it at direct.
Everybody
Okay,
needs to
guys.
call Orlando. Call Orlando if you want your mortgage eliminated.
So
Yeah.
if anybody, again, is looking to make a change, whether you're already licensed in life insurance and you want to make a change, maybe you're not happy where you are, please reach out to me. I'm adding to the team. In fact, I have a number in my head to add to the team this week. So reach out to me ASAP. If you are just looking to get in the industry, I can get you the study material, and you could be licensed in less than 2 weeks. So please let us know and reach out, and there's too many souls out here that need to be saved. I've been able to help in over 18 states, and there's too many states on the map, but I can't do it by myself. I need a good team behind me. So this is Lady G, and I promise you I am complete. Thank you, Queen, for having me, and I will be back whenever you'll have me.
Thank you. Thank you. Good night to everyone, and we will see you guys here on Zoom next week, Wednesday, 7 p.m. Same time, same link. The replay is going to be on YouTube.